First off, the markets are getting hit hard this week. Futures, those bets on where prices are headed, are getting crushed, bonds are taking a beating, and even the dollar is losing value. Usually, when things get shaky, people run to safe havens like gold, but even gold is just sitting there flat. It's chaos, no real safe place to hide your money right now. Some folks are saying this doesn't happen often, and they're just waiting to see who's going to go bankrupt first, or if governments will step in with more money printing. That's the QE part. Now, in the crypto world, there's some interesting stuff happening. Big players on exchanges, the CEX folks, are starting to buy back crypto at low prices. Basically, they're scooping up assets from newbies who bought Bitcoin at $68,000, panicked when it dropped, and sold at $100,000. Yeah, they lost money. These big players are holding onto stablecoins like USDT or USDC and waiting for the right moment to buy more crypto at a discount. The plan? Buy low, sell high, like buying Bitcoin at $80,000 and selling it later at $125,000. Classic move, but it shows they're playing the long game. Binance's CZ is reminding everyone that chasing quick profits isn't the way to win in crypto. Real wealth comes from patience and supporting solid projects that actually build useful things. It's a marathon, not a sprint. On the bigger financial stage, Goldman Sachs, those Wall Street heavyweights, admitted they were wrong about calling the bottom of the market. They're saying investors are debating whether we're in a new economic era or just a rough patch. But there's still hope for a bull run because tech and media stocks are looking more reasonably priced now. So, not all doom and gloom. Then there's the whole US debt situation. A lot of people are wondering if the US government wants a recession. Sounds crazy, right? But here's the thing. By 2025, a whopping $9.2 trillion of US debt will need to be refinanced. If there's a recession, interest rates would likely drop, making it cheaper to refinance that debt. It's like the government might benefit from a market crash, which is wild to think about. But historically, every recession since the 1980s has followed a peak in interest rates. And the Fed usually cuts rates to stimulate the economy. So, a recession could actually lead to lower rates, which might help the US handle its massive debt crisis. Oh, and China's in the mix too. They just injected 96.5 billion yuan into their economy to keep things flowing, but they also pulled out 0.5 billion yuan. It's like they're trying to balance things out, but it's a tricky game. So yeah, it's a wild time in the markets. Crypto's volatile, traditional assets aren't safe, and everyone's trying to figure out if a recession is coming, or if it's already here. It's like watching a high-stakes poker game where no one's sure who's bluffing. Buckle up, my friend. It's gonna be a bumpy ride.